think I've said hi to everyone except Vivek, but we met each other in Shanghai last week.
Yes.
So first of all, thank you for attending this panel, both to the audience and to the panelists. I'll introduce the panel and myself. My name is Nicolas Duran. I'm a director and partner at Fearnley Securities in the investment banking team. Carlos, who's the CFO of D'Amico Tankers, and Per Echtelt, CFO of the newly formed Hafnia Tankers, meaning post-merger of BW Tankers and Hafnia. Andreas Røde, who's head of business development and M&A at Ocean Yield. We have Vivek, who works for the Scorpio group as a finance director, and Christos Begleris, co-CFO of Starbulk. So actually we have three companies that are leading in their fields here. I don't know who's biggest now of Scorpio and Hafnia on the product tanker side, but it's one of you. So certainly a good panel to have. And Starbulk, as you know, after the mergers with Songebulk and ABY have become the largest listed dry cargo owner. So a very good panel. So I'd like to start off by making a comment, and then I'll ask the panelists a few questions. The Japanese market, as we've heard from other sources here today and in recent years, is famous for being very selective, and gaining access usually is a fairly time-consuming exercise for Western companies. Some of the companies represented on this panel have been active in the Japanese market for a long time. Both the BW Group and D'Amico has had a lot of activity here in Japan, while others are relative newcomers, I guess in particular Ocean Yield and Starbulk into the Japanese market. So if we start with you, Carlos, maybe you can tell us a little bit about whether you've noticed any significant changes in this market over the last 5 years or so, and in what ways? I mean, you having tapped this market for a considerable amount of time.
Yeah, thanks. As you're correctly mentioning, I mean, we as the D'Amico Group have had very strong relationships here in Japan for many years. And that was very useful for us recently because we could tap and use these relationships to refinance a number of our vessels on the sale-leaseback market. I must say that also on the banking market, Japan is very important for us. We work with 14 different banks, but our biggest bank today is a Japanese bank. On the sale-leaseback market, we explored the various alternatives out there, and of course Japan was one of them. And the Japanese market maybe has as its main drawback the fact that you cannot do large deals. You usually do one vessel at a time, but actually that suited our needs. That's what the way we wanted to proceed. We wanted to refinance just as much as we needed and not more, and we wanted to take a gradual approach because we thought that the recovery actually was going to arrive earlier than it did, and we are now seeing some signs of improvement, but it's still not where we would like it to be, where we expect it to be in the near future. That we like the Japanese market. Not only we like the Japanese market because of the flexibility that it offered us. I think it was mentioned on the previous panel. We managed to secure deals which are both long, 10 years usually, and with purchase options starting on the 2nd anniversary. At any point in time with 3 months notice. On a few deals we had options starting on the 3rd anniversary. The terms, I would say, were tighter than we could achieve in other markets. We talked with US funds, we talked with Norwegian funds, we we looked at the Chinese market too, and we really, both in terms of pricing and in terms of flexibility, we thought that the Japanese market was the most attractive for us. The first deal we did was in May 17, and we have done 8 sale-leaseback deals, each one vessel at a time, and I would say that the terms haven't really changed that much for us. I mean, they were pretty similar. But what we hear by talking to the trading houses, to the Japanese community in general, is that the market has become more competitive. A lot more people came to Japan to tap into this market on the sale-leaseback deals, and therefore the terms now achievable are not always as attractive as they were a few years ago. Maybe slightly lower LTVs and slightly higher pricing. Yeah, basically that's it.
So, pedigree and history often seemingly trump credit metrics and balance sheets in terms of importance when sourcing debt in Japan. At least that's been our experience. This means that there's a lot of relationship-driven deals in Japan, for better or worse. This means that being a public company is not always an advantage, because if you have ownership which is fragmented across hedge funds and private equity funds and all kinds of investors, and you don't have a very strong sort of single family owner, that's sometimes seen as a negative thing from a Japanese perspective. So, Starbulk, Christos, you're a recent entrant to the Japanese market. You, of course, have a very strong balance sheet and are good credit, but you're also listed and have private equity as a strong owner in your ownership structure, etc. Have you seen these things as a challenge?
Nicolas, I would partly agree with you. You said recent entrant in the Japanese market.
Sorry, finance market.
It's only in the finance market that
we've
recently tapped the Japanese market. Actually, our principal has been doing business in Japan, both on the time chartering in business, as well as on sale and purchases, as well as building vessels for the last 20 years. So I would agree with you that as far as reputation and being led by a principal who has strong ties to Japan is concerned, that definitely has been very helpful in allowing us to also tap the Japanese financing markets. However, what has also been extremely convenient, I was recently talking to one of our Japanese owners who's a lessor on a financing transaction that we're doing, is the fact that because we are publicly listed, we have a holding structure and we have complete transparency. And this, for the Japanese financing providers, has a lot of value. And I guess if we were a private company, we wouldn't be as transparent as we are being publicly listed. So on the one hand, yes, you need the relationship angle, and you need a strong principal who has a good reputation of always keeping his promises and of his financing partners never losing money on him. But on the other hand, you also benefit from the holding structure, the size, as well as the transparency of a listed company.
Okay, thank you. So, there's also another company or other companies here on the panel that not only pass the quantitative credit tests, but also tick all the more qualitative, call it Japanese boxes. So pedigree and track record and these other things we spoke about. And for you, and I'd like Perry to answer this, now having BW as your largest shareholder, do you feel that the capital available in Japan is in the quantities and at the terms that make it worthwhile maintaining an active presence in the sort of Japanese finance market, such as, for example, D'Amico has done?
Yeah, So in January, the merger between BW Tankers and Hafnia took place. That means that two capital structures came together. It's in total a little bit over 100 ships owned and operated by the combination. So that's a larger balance sheet. You have to look at multiple financing sources. You rightfully say that BW, still being 65% shareholder of the company, has a very long history in Japan, whether it be with the shipyards, for time charter in, with the owners, clients, the petrochemical companies, etc. We haven't been very active in the Japanese financing market recently. There's a few sale and leasebacks that we have at the moment. Going forward, definitely we'll be looking at the Japanese market as well, typically financed by commercial bank financing. But with the growth that we've seen, the availability of capital, definitely we'll be working on extending those relationships in Japan as well.
Okay.
Nicolas, if I may add from my side, I think the ability to do large transactions is something that unfortunately right now we do not look Japan for. Because, for example, in China, we are able to go to a lender, to a lessor, and underwrite deals close to 200 million. Same holds for European banks. We recently closed on 2 or 3 large syndicates, and all of them were north of 200 million. In Japan, the tickets are small. So you're talking from anything from 10 to 30 million. However, it's definitely a market that one company should have access to because of the flexibility, the terms, the pricing, the competitiveness that it offers.
Yeah, those are valid points, and that draws us to our next topic, which is access to sizable transactions. And I think apart from maybe JOLCOs and debt transactions that are backed by some sort of long-term contract to an end user, we haven't really seen, or we don't really see a lot of lending or financing capacity above sort of $50 million ticket size. So a question for Andreas from Ocean Yield. The size of the counterparty universe in Japan for companies who own larger and more expensive assets, such as ultra-large container vessels, LNGCs, VLCCs, shuttle tankers, etc., is therefore quite limited. What has been your experience in overcoming ticket size limitations when working with Japan?
Well, first of all, I want to say that the next time you have a deal in $200 million, you can always come to us. You don't have to travel all the way down here. We can sort that out easily. No, but I think that it's a good point, and size clearly matters. I think when it comes to raising capital for larger transactions or for larger, particularly more complex vessels, and this was also mentioned on the previous panel, I think patience is definitely a virtue, and you need to be patient, and it takes more time to educate the potential financing sources on the type of vessel that you're looking to finance, and also the bigger the size, probably the greater the demand for the type of, and also the number of creditors that you enter a facility. I think we've been successful putting together sort of either a syndicate which is underwritten by one financial institution, which is then bringing in traditional smaller Japanese banks into the transaction, or even building a syndicate as part of putting the transaction together. So you actually have 2, 3, or 4 financing providers that come into a transaction together, ensuring that you get a size which is sort of $75 million or thereabouts. So it's definitely possible, but it takes more time.
Okay. And so someone mentioned earlier that the market has become a bit more competitive as there have been a lot of new entrants, and that also means that at face value, as Carlos mentioned this, the terms may not seem as attractive because you don't get the leverage, and maybe pricing may have spread out a bit. But the question for Scorpio, there seems to be a lot of rigidity in the Japanese market, but you have announced multiple financing transactions in Japan that have been structured in a somewhat more creative way and differently from a lot of the traditional Japanese lease financing deals. They've been done at lower leverage, but I suspect that you must have gotten something in return. So maybe you can tell us a bit about your experience there.
Absolutely. Firstly, I would like to say good afternoon, everyone. We at Scorpio have done a few transactions similar to Carlos. We've been doing it on a bilateral basis, mainly with local owners. So far, we've concluded 5 transactions, all sale leasebacks. I wouldn't necessarily say that the leverage is low. You know, if you look at the financing amounts that we were able to obtain at that time and compare it to the then prevailing market value of the ships, probably it was between 70 to 80% leverage. So I would say it's decent. And in fact, we've done some transactions in China, like 75, 80% leverage as well. So the leverage is okay. I think the credit is good. You can obtain that kind of leverage from the owners in Japan. Certainly, there are a lot of benefits in terms of the terms you get over here, mainly pricing, and that is, of course, a very important consideration for us. But the negative is the ticket size. So, you know, you have to do multiple transactions to get, you know, as much as capital you want to raise from this particular source. So, you know, the 5 ships that we did in 5 different bilateral transactions was just a little shy of $100 million. But in China, if you do something, you can do it on a bilateral basis, but then you'll probably pay a little bit more out there. So it's certainly been a good source of capital for our business, and you know, we certainly are ambitious and want to further develop diversifying our capital. So yeah, we follow and monitor this market quite closely.
Okay. So for several decades, there's been a very strong reluctance in Japan to finance crude tanker assets. And I think that's one of the examples of a type of asset that the Japanese typically don't prefer or like to finance. You know, for some of us from the West, we might think that the basis on which that position has been taken may be a little bit misguided, but there certainly is a lot of sensitivity as to what type of assets you can finance in Japan. The ones that usually, the tanker deals that usually make it through here in Japan are product tanker deals, and there's usually some kind of limitation on trading pattern or cargo in order to avoid sort of a loophole whereby you do a transaction for an LR2, but essentially you can trade as an Aframax in the crude trade. So this is a question for Hafnia. Does this impact your pull towards Japan, that you may see trading limitations in the financing arrangements here?
Yeah, obviously, what you trade and where you trade is very important. You want as much flexibility as an owner as you want. I think it's indeed for the larger sizes in the product tankers where it's more of an issue than any other segment in the product tanker industry. Given a certain size of your fleet, you should be able to work with that in where you trade those ships. But if it's an issue, definitely it would impact our pull towards that market. Although I think going forward, if you're looking at transactions in this market, there should be a way of trading as flexible as possible.
Okay. Andreas, in Ocean Yield, you pride yourself on having, you know, very high level of diversification, which from you know, your investors being typically yield driven makes a lot of sense. But that also means that you have a lot of assets that, from a Japanese perspective, would probably seem somewhat odd or at least unknown. What has been the lessons that you've learned from your recent interactions in Japan with regards to assets that are not just bulk carriers or product tankers?
Yeah, no, you're right. I think today we have around 60 vessels ranging from car carriers to bulkers, tankers. We have some offshore assets, etc. I think the bulkers are probably the most easy ones to finance in this market. I think for us, the importance is, as was mentioned here before, sort of diversifying our funding base and making sure that we optimize our cost of capital in any single transaction, but also on an overall basis. We've actually spent quite a lot of time looking at, I think, two different